What is up, flippers? Let me just break down today's GBP USD trade, which is currently still running, but I've already booked partials on it on the 50% of the whole position. So let's just begin with the plans that I've built for you yesterday in the weekend forecast video. Because yesterday in the evening, I just posted a video for you, which was discussing the plans that we are building for today and for the upcoming days of the week. So basically, I will give you a short breakdown on the 50-minute time frame of what has happened, because I already gave it to you in yesterday's video, but just simply and quickly running through it. Price has mitigated a 4-hour demand region here, and after a 4-hour demand region mitigation, deep mitigation, price aggressively changed the character to the upside right here. This is the extreme character changing area, and we have a decisional zone that has caused a nice inefficient push to the upside, which strongly changed the character on the next structural high point. So basically a strong change of character has happened after the 4-hour deep region demand mitigation. Okay, so the plan that I've built for you yesterday was pretty simple. Price was somewhere around here. Let me just check, somewhere around here at this region. So basically it was in between the low point, in between this demand region, and in between this high point. We had the 50-minute high point right here, and we had the 50-minute demand low point right here. So basically everything that has happened in between this low point and in between this high point was substructure, meaning every single supply region that has formed in this region was substructural supply zones and substructural movements, meaning we couldn't really trust those areas, and that's why I was simply expecting the tap of this demand and the confirmation on this demand, or the break of this 50-minute high point with an impulsive movement. So after the break of this high point, we could expect the continuation on the newly freshly formed demand region. So what has happened today? So basically in London session, I managed London session today, but it wasn't really managing because there was nothing to manage about London session, because basically there was no movement in London. So if you take a look at this London Open, here was London Open exactly at this point, and this was London close right here. So price basically moved inside of this range, and this range was inside of this substructural movement range also. So it wasn't really tradable, so we couldn't really do anything besides waiting for the mitigation of this demand, or the break of this high point. So what has happened in New York session? Why did I decide to trade New York session also? So basically the reason I decided to trade New York session also is because London session it wasn't even a session. So today's London session wasn't even a session because there was no movement in London session. So I wanted to give it another shot in New York session to see if the plan that I've built for myself and for you guys will work out eventually. So what has happened? Price exactly followed the forecasted plan because it mitigated this demand region. After a demand mitigation right here, it just printed a change of character to the upside and left several zones behind, which was leading to an opportunity with a risk entry. So let me just switch down to the 1-minute time frame and show you what has happened here. So, once again, the forecasted plan that I've created for you was that if price mitigates this demand region and it changes the character after a mitigation of this demand, then we will be able to take longs based on the character changing / flipping demand area, and we will be able to target the less recent 50-minute weak high point. And yes, I broke it down in the weekend forecast too, that if price mitigates this demand, creates a change of character and the confirmation, we will be able to target this high point, because this is how the structure works. Like usually after price mitigates a 50-minute / 5-minute demand, it will run up to 50-minute high point, will break that high point and will create a pullback. After this pullback, it will create another opportunity. We run up to the new high point and will create a pullback. And this is how the 50-minute structure works and goes. So that's why I'm still targeting this 15-minute weak high point. Let me just check the 1-minute time frame. So here's what has happened. Price just swept a nice amount of liquidity into this region. Basically, this could have been considered as double bottoms, first bottom, second bottom. This has been swept into the region. But basically, this was the liquidity to right here. But in itself, this was a liquidity for the demand area to take. So price swept this liquidity with an aggressive movement into the demand. After this aggressive sweeping movement, price instantly reversed with a V-shaped rejection. It just bodied below on the 1-minute time frame, but we don't really consider these 1-minute breaks, because if the demand is on the 5-minute time frame, then we will consider the 5-minute time frame to confirm if it was a break or sweep only. And if I switch to the 5-minute time frame, we will see that this demand was only wigged by a 5-minute candle, and it instantly reversed to the upside. So switching back to the 1 minute time frame, let's just scan the criteria for this trade. But first, let me just explain this whole process in the trade. So after the mitigation of this demand and after the aggressive reversal, price changed character with a flip zone. So basically it was reacting on this supply, last recent 1 minute supply with this reactional candle. And after this reactional candle has been printed, price just aggressively broke through this supply with 2 huge volume candles. So this was the first extreme area that I marked out. I could have marked out this region too, but you know, for me, the real beautiful and strong and price actiony volume candles have been formed by this demand candle, because just of course these are these are volume and inefficient candles too, but just compare these candles with these 2 candles. And if we are trading in a really aggressive bullish order flow, which was actually the case in this scenario, because 4 hour was bullish, daily was bullish, 50-minute was inside of a 50-minute bullish range, and 1 minute just changed the character aggressively, really aggressively, you want to mark out the less recent areas, because price will likely react on those areas and won't come back down to the extremes. So I just marked out this candle because this is the one that has caused these 2 nice volume candles to the upside. After this one, price rejected on another supply region here with this rejectional candle and broke through it with again 2 nice volume candles. After this one, it just printed small amount of liquidity for this 1 minute demand. I just moved it badly. So form liquidity, small amount of liquidity for this demand. Because we can't really consider this weak as liquidity, and this isn't really liquidity too, because there wasn't really a nice push away from this low point. This could have been counted as liquidity because it was a middle of nowhere reversal, but I needed to see some amount of volume or inefficiency or a real nice push away from this point, which hasn't happened actually. So I didn't really count the liquidity here. I didn't count the liquidity here as criteria. There was no count by liquidation for my own criteria checklist. So what has happened here? Basically, the thing that has happened here is that we have an extreme zone and a decisional zone. What do we do in these cases? First, we wait for liquidity creation for the decisional and set the 1% limit order on the decisional. For me, there was no liquidity creation for the decisional, so it wasn't an option for me. Second, we wait for the confirmation on the decisional or set a limit order on the extreme. So these are the this is the second scenario that we can do. Simply just wait a confirmation on the decisional. If it happens, we will be able to take that trade, or just simply set a simple limit order, 1 limit order on the extreme. And what is the third type? We can simply use a risk split order. So we can split the risk in between the decisional and in between the extreme. And that's what I did here, because usually in majority of my trades, that's what I'm doing. Splitting the risk. If you check my recaps in the previous like 10 to 20 recaps, I've used it like in 80%, 90% of the trades. I used this simple risk split order in 80% of the trades in my previous 20 trades. So yeah, that's what I did here. I used this decisional and use the extreme. The decisional tagged me in. Then it ran up to 50% partial. So I just booked partials here, which was 7 risk reward ratio, because the total risk reward ratio is 14. So it was a perfect 7 risk reward ratio partial for me on the 50% fly. I removed 50% off of my whole lot size. And yeah, partials booked. Position is still running. I'm still targeting this high point. If it runs back down to my break even, then, you know, I've already booked partials. I've already made money. Money is already in my bag, in my pocket. So there's nothing to lose on this trade. I'm already happy about the outcome. So I just count the criteria on this trade quickly. First criteria was the higher time frame mitigation. Second criteria was the liquidation right here on these double bottoms. Third criteria was inefficiency, both here and both here. But I will just count the criteria on the decisional, because that's where I entered, and that's where I've been tagged in. Fourth criteria was the pro trend pro order flow, and it was extremely pro trend pro order flow. Daily, 4 hour, 50 minute, 1 minute, 5 minute, everything was bullish. So it was a fractally confirmed pro order flow trade, which you have to take, right? So the fifth criteria was the flip here, flip here. Sixth criteria was the V-shape rejection, perfect V-shape. I mean, it's unarguably a V-shape, coming down, immediately reversing to the upside. Seventh criteria was the 50% or more than 50% mitigation of the higher time frame region. Eighth criteria, price wasn't coming from an unmitigated opposite-sided zone. Some of you guys marked out a 50-minute supply here. but that wasn't a supply. That wasn't a supply. Sorry, it was actually somewhere around here. So that wasn't a supply because that was only a substructural supply. As I showed you on the 50-minute time frame, this is how the structure looked like. It was coming up, coming down, and it was in between this high point, in between this low point, and it was creating this substructure on the 50-minute time frame. Meaning if price reacts on, for example, this supply, this 50-minute supply, which is not even a supply because it's only a substructural 50-minute supply, then it can be counted as an opposite-sided zone reaction because that's not an opposite-sided zone. This is only a substructural zone. This is the real zone. This is the real demand, and this is not a supply. It would have been a supply, for example, price change character, something like this, where it was coming up, and it would have changed character like this, and it would have created this bearish order flow. But it wasn't the case in this time because price was in between the high point and in between the low point on the 50-minute time frame. So this supply right here wasn't a supply. So we can count the criteria as the price wasn't coming from unmitigated opposite-sided area. 8 criteria, tick. 9 criteria, liquidity to target. Insane amount of liquidity target. There was just this huge liquidity trend line that could have been targeted. Perfect liquidity target. I mean, this whole liquidity will be swept out and the highest point of the liquidity will be taken. This is the 8, sorry, not the 8, it was the 9 criteria, and the 10 criteria was the insanely strong pro-corrective pullback. I mean, yeah, it's unarguably a criteria, and unarguably the 10 criteria because price was coming back to this demand with a nice pullback. Look how much it hesitated to come back to this demand. It was ranging for days to even mitigate this demand. And just look how fast this demand created this inefficient movement to the upside. So yeah, this is the 10 criteria. And there was no combined liquidation for the trade. So we had 10 criteria on this trade, which you have to take every single time in a fractally confirmed daily 4-hour, 15-minute, 5-minute, 1-minute bullish order flow and trend. We have to take the 10 criteria regardless of the outcome. And you have to know the rules. You have to know how to use the risk split orders because this was a perfect risk split order entry. But if you have missed this trade, there was a second opportunity. Let me just remove everything. If you have missed this trade, there was a second trade which Robbie took, which is continuation type 1. After the first reversal entry, which was this one, you know, if price creates a break of structure to the upside and liquidity for the entry, then there will be your continuation type 1. Because after the first reversal entry opportunity, which was once again here, price just broke the structure here to the upside. And if price creates liquidity for the structure breaking POI, which has happened here, perfect double bottoms has been created, then you can use this new freshly formed demand area as your continuation type 1 entry. And if you use the 5th person, you use the full body entry, both tag you in. Let me just see if a 3-pip was enough for this trade. No, basically it wasn't enough, so you should have used the 5th person, but that was a tag in itself also. So yeah, this was 2 entry opportunities, 2 really high probability, really high criteria entry opportunities in one single New York session. The first one is this one is a 1-to-14 risk-reward ratio. Second one is almost a 1-to-13.5 risk-reward ratio. So yeah, if you caught any of these trades, congratulations, because both of these trades were pretty high value and high probability. And yeah, that's it, guys. You know, just check the educational topics because if you still don't know the educational topics, then you still have to learn them, because in both of these trades, you could have took these trades if you've learned the educational topic videos, because basically in the first ever educational topic video, we discuss about the decisional and extreme zone entries. Then after we discuss about the continuation type entries, and this was the continuation type 1 entry. If you don't know what I'm talking about, just please watch the contents, because that's how you will get better. In these recap videos, I won't share the contents. I won't explain the contents again. Why? Because those have been already explained. In these recap videos, I will just show you which type of entry did I use or did we use, and what kind of criteria did we use for a trade. But the basics can be learned from the educational topic videos, the PDFs, and the video course. So please check it out, guys. And that's it. Wish you a beautiful rest of your day. See you tomorrow.